Welcome to the Achievement Apex podcast, the podcast where I share my knowledge and experience on trading psychology, strategy, risk management, and everything else that you need to know to take your trading to the next level. I'm your host, Brendan Murphy, and without further ado, let's get ready to learn something new that you can use to improve your trading results. Okay, in today's episode of the podcast, I'm going to be talking about the 8 different ways that you can use technical analysis to benefit in your trading. So the first thing you basically need to know is that technical analysis is the study of markets, whether that's stocks, bonds, indices, commodities, Bitcoin, whatever it is, but as it relates to price action only. So you're not looking at earnings estimates, you're not looking at like company return, company growth, you're not looking at inflation, jobless data, all of this stuff to determine whether you think the value of a stock will rise. You're simply looking at price action and then creating a set of rules based on that to follow that is likely to result in profit. So the first benefit we have of technical analysis is that it's more suited to us day traders than like the intrinsic long-term value investors. The reason that it's more suited for us is that we can use it to make timely entries and exits. We can use it for short-term profit rather than having to pick this long-term investing style approach, which means that in day trading, because we're able to develop a shorter-term approach, we can use it to make more profit in a shorter period of time. Now, the reason for that is the second benefit of technical analysis, and that is that it's versatile. So that means that you can be any trader. You can use any time frame with any style, you can trade any instrument, no matter what it is, you can come up with a set of rules based on historic price data, which will make you more likely to profit in the future. The whole reason that technical analysis works is by, as I said, you develop a set of rules and then they give you what's called an edge. And this edge basically tips the odds ever so slightly in your favor. So if you have an equal win and an equal loss, so let's say when you win $5, when you lose $5 as well. If you can tip the odds so slightly in your favor, so let's say you win 51% and you repeat this over and over and over again, eventually you will make more money than you lose. And that's how technical analysis works. You just create the edge to put the odds slightly in your favor and repeat this over time and let the law of averages play out in your favor. Like for example, if you want to trade on the 5-minute time frame, you can create some kind of strategy that uses the RSI or some other oscillator in combination with a moving average or something like that to get good entries when the market dips, quickly profit from that short up move and get out quickly. Like you don't need to worry about what the company's earning that year because you don't care. You're getting in and out in 5 minutes, And similarly, you can put the chart on like a 1-day time frame and find a spot where it drops over the course of a month and you're like, okay, that's a good spot to enter. Then I can get out a month later when the price rises. And once again, you don't really care what the earnings data is. Like all of that stuff is actually built into technical analysis. I'll go a bit more in depth on that later on in this episode. But that's basically all you really need to know. Is the first one is that it's more suited for day traders because for the second reason, it's versatile. You can use it on any time frame, any investing style, any instrument, whatever it is, you can make it work for you. Now, the third benefit of technical analysis is that it's inexpensive. So for example, when you look at like fundamental analysis, you can get things such as a Bloomberg terminal, which costs $25,000. There are services online to give you fundamental analysis information too, but also, these cost hundreds of dollars every single month and whatnot. But when it comes to technical analysis, all you need is a chart. And there are tons of charting websites for free, such as TradingView. And they don't just give you charts, they give you a ton of indicators too that you can use. So like for $0, you can get access to charts and hundreds of indicators that you can use to tilt the odds in your favor. The fourth benefit of technical analysis, and this is the thing I touched on just before, is that it represents all current known information on that instrument. So for example, you're trading the S&P 500 and the price is $3,500 US. It's that price because all of the people investing in that instrument are reading all of the information. All of the big hedge funds and whatnot, they have this financial information. They're making the big plays based on that, and that moves the price. All the retail investors are doing their technical analysis. Some may be doing fundamental analysis too. They're putting their money in, and that moves price. And so price, where it is right now, is a representation of all the known information on that stock, and that's why price is there. So in a way, you can say that fundamental analysis is actually built into technical analysis in a roundabout kind of way. Like, no, they're not the same thing, right? But the effect of fundamental analysis is built into technical analysis. And so that's one of the benefits, right? If you have a news event and that made price plummet, that plummet is in the price data, and now that becomes the technical analysis. The news event is not part of it, but the effect is, and you can create strategies based on those effects if they happen, if they repeat, right? So let's just say something happens every year and it often tends to make the market lose value. Well, in your technical analysis over every single year, you see that and you can say, okay, there's a thing that I can use to tilt the odds in my favor. The fifth way that you can use technical analysis to help you in your trading is that you can use the historic price action as a guide for what's likely to happen in the future. And this is kind of what I've touched upon already, but you get a chart, you get candlesticks, right? You see the highs, the lows, the open and the close, and these, there's candlestick patterns like dojis and dragonflies and whatnot, and you can use these to predict the future. In combination, you can add indicators like an RSI, a money flow index, you can add a moving average, you can add Bollinger Bands. There's so many different indicators that use price action to give you an indication about what's likely to happen in the future. And when you get really good at this technical analysis, you can use these to shift the odds in your favor by, quite a lot, so then you can become really profitable. The sixth benefit of technical analysis is that it takes less time. And the main way that you can get this to take less time is that because technical analysis is based only on historic price action, which is just numbers, you can use math to create formulas. You can put it into code that executes like that, does the entire technical analysis for you, and then spits out, okay, trade here, close there, long, short, don't touch, and it happens like that. You don't need to look at the numbers, write them down, figure them out, crunch them and all that, watch the news, okay, there's a headline, maybe that means this in the future, so then I'll trade now. No. You put your number in a code, if RSI this, if moving average that, if Bollinger Bands this, then trade. Put it into code, it analyzes the data for you, boom, trade, boom, trade, boom, trade. Repeat that over time, and that's how you make money because the odds are in your favor. The seventh benefit of technical analysis is that the possibilities for profit are endless, and that's because there are infinite different combinations you can have of these indicators, of these rules, of your analysis to predict the future. For example, if price moves $10 up and you're able to get in at the bottom, depending on the ways you adjust your technical analysis, you can get it to spit out a different number of units to buy for you to profit from that $10 move. So if you figure out your technical analysis and it says, okay, buy 10 units, you made $100. If you can figure out some way that the technical analysis spits out, this is the ultimate good trade, put 100 units on now you just made $1,000 because you were able to optimize and refine your technical analysis to improve that trade. And you repeat this over the course of time, and again, then you have that $1,000 trade, another one, your capital's growing, so now you're having 2,000, 2,000, 2,000, and you can do this over a short period of time as well. Like, as I said, you can use the 5-minute, 15-minute, 30-minute charts and repeat these trades like multiple times a day. You don't need to just buy once, wait for the value of the stock to grow $1,000 over the course of a year, and you've just made $1,000 in a year. Like, the possibilities for growth really are absolutely endless. There's no cap on them. The only limit is how good you are as a trader, how good your strategy is that you follow. And that leads me into the eighth and final point of how technical analysis can benefit your trading, and that is that there are resources already ready for you. So you don't have to create your own indicator based on the data. There are hundreds and thousands of indicators all ready for you. You put them on, boom, and they're giving you indications of what's likely to happen in the future. There are strategies out there which may be based on one or more of these indicators that give you even more reliable estimates of what's likely to happen in the future. And some of these are free, some of them cost money. It tends to be the case that, paid things are better quality than free things. Like, for example, I make custom strategies for my clients designed specifically for their goals, how often they want to trade, what their capital is, and so on. And these tilt the odds heavily in their favor, so they repeat these trades over a long period of time, and then their wealth skyrockets. They don't have to do all of the analyzing themselves, study the market, learn this, learn that, look that. It's just like, okay, I make the strategy for you. Now you've got it.